All right, so I'll go ahead and get this going.
All right.
Hello, folks. Drew and Steve here with ProFuturesTrader.com with just a weekly market commentary. This isn't specific trade advice necessarily. This is just kind of a market overview of both what Steve and I have been looking at all week. It's been a wild week, particularly in those metals markets. We also had the Feds meet this week with a 25 basis point cut, where the markets really did tumble. I know overseas as well, the overseas markets tumbled as well. But let's go ahead and take a look at what Steve's been looking at. So, Steve, what is it you want to start with today? Just kind of an overview.
Yeah. Well, we'll start off with gold. Gold, I think, made a daily cycle low today. One thing about the gold cycles, if you go back several years, gold cycles last typically around 40 days, something like that. The gold cycles have really gotten a lot shorter. If you go back this past year, I think we've had 7 cycles, daily cycles, what I call daily cycles. And so from bottom to bottom, they've been averaging around 28 days now. And it's not uncommon to get a cycle down around 24 days, something like that. So I think what we got today was probably the beginning of a new daily cycle. And it's right in time. Drew, if you can show that next slide. And what this shows is that if you go back over the past 15 years in different timelines, and there's 3 different lines there. One of them goes back 30 years. The other 2 are for 5 years and for 15 years. But on average, on the last 15 years, if you bought gold on December 20th and you held it until January the 13th, that it was a profitable trade in 15 of the last 15 years. And that gives me a lot of confidence that this was actually going to be a bottom, and today was the beginning of a new daily cycle.
Good. Well, I have to make a quick comment here, particularly how strong the USD was. I'm actually surprised the metals didn't get hit harder. And, you know, we are only a couple $100, not even a couple $100 off the top, that 2,800 area. So in my opinion, the metals are, in my opinion, looking strong. If that dollar turns, look out. And I know there's a lot of inflation chatter right now across the board going into next year. So I think you are definitely on to something here, and it'd be interesting. I know there were some calls for 3,000, but we'll see if we get there. And in my personal opinion, it's been pretty resilient so far.
Right. And it kind of lined up, you know, we had, I think probably it was a top in the dollar also. And so as that dollar begins to decline, that'll be some wind in the sails behind a lot of things that as commodity brokers, we like to trade.
Yep, absolutely. So want to go and jump into the S&P I see you've got here?
Sure. Along with gold, we also have a timely trade with the S&P 500. You could also look at the NASDAQ if you like the tech, which I like the tech as well. But the S&P in particular, again, just like gold, it looks like that it's probably beginning a new daily cycle. I think that the S&P, the one thing that makes S&P different from gold is that gold is in week 5 of its long-term cycle, and those cycles typically will last over 20 weeks. And so I think gold and the other metals probably have a lot further to run. The difference with stocks is that we're starting to get late in the weekly cycle now, in the longer term cycle. We had an intermediate cycle bottom last summer, and now on week 19, that's pretty late for an intermediate cycle. You typically would start taking some risk off at this point, but at least for probably a few weeks, we could have a strong rally. on into the middle of next year of January. So if you
Yep.
show that next slide, Drew.
Okay.
And what this shows is that if you bought the S&P 500 on December 17th and you held that until January the 12th, that historically over the last 15 years, that's been a profitable trade in 14 of the last 15 years.
Yeah, it's
So
like 14.
so that's your Santa Claus rally you always hear people talk about. It's friendly time heading into the end of the year, and that's typically good for stocks. All right. This was something that I'm just kind of throwing in there for if you want something different to trade. Orange juice. I was long orange juice a few weeks ago, and but it's time to get short. And we got what your traders like to call a swing high today, and that's a confirmation, one of the confirmations that traders like to follow. So I think we're going to have probably a decline in orange juice. If you can go to the next slide, Drew, and this data comes from Sentiment Trader. It shows that December is typically the worst performing month for orange juice of the whole year. So there's a seasonal component here where orange juice is strong in October, November, and then December into the first part of the year becomes a lot weaker. So if you wanted something different to try, I've traded orange juice before. One thing I would warn about orange juice is you can't use stops because the market makers will steal your position from you. So it's a thinly traded market, and it's easy to lose a position if you're using stops. And the best way to manage risk is just buy one, just go light, and that's the biggest tip I can give you trading orange juice.
So you're just saying a lot of volatility in it where they just grab your stops all day, or you've had, I guess, past experiences where in the orange juice, because it's so thinly traded, where it's a lot more risk where they just kind of grab your stops and kind of bounce people.
It's worse than palladium. I know you're going to talk about palladium here in a minute, and I love trading palladium also, but I don't use stops on palladium either. When I trade it, I'll just get one position. I'll go light on that one.
So how do you manage it? I mean, if you're not using stops, then how are you kind of just kind of you're keeping all eyes on it the whole time?
Yeah,
just to kind of monitor.
On volatile trading instruments, you got to give them room to wiggle. And if being uncomfortable without a stop is not for you, then I don't recommend trading that. You manage risk by taking a small position size.
Yep. No, I agree with that. I remember you had an orange juice and one tick it moved $500, and not one tick, but in, I should say 1 second, it moved $500. And I just was like, I don't trade orange juice on a personal level. But in saying that, I was just shocked at how quickly that one can move just in a second, so.
You can back it up again, Drew, to the chart. Every point on orange juice, every point that it moves is $150. It's a 15,000 pound contract. And so I could see orange juice probably has 90 to 100 points to the downside. So it could be a profitable move for you if you catch that seasonal tendency for a drop in December.
Gotcha. So let's go and jump to the Aussie dollar here.
Yeah, and one more that I'm following is the Australian dollar. Their fiscal year runs July to June, the Australian dollar typically declines late in the fall on into December, and then it typically rallies on into April. And so this is another seasonal trade. And we go to the next slide. And you can see in 12 of the last 15 years, it's been a profitable trade. But I just like how the chart looked. It made a swing low. And that's a good time to enter. And you can place a stop on these just below these swing lows, or like on orange juice, you could, if you wanted to put a stop just above the yesterday's high, you could do that probably. And I doubt that orange juice would rally up to yesterday's high to
orange juice or the Australian.
But the chart looks kind of different, kind of the same between orange juice and the Australian dollar, and that's just the parallel I was drawing there. But the Australian dollar would be a safer trade, I think, just because it's a much more heavily traded commodity.
Gotcha. So, well, good stuff. So, any highlights of on your book this week? With any, I know we can't share specific client stories, but any interesting things happened to you this week while you're trading along?
No, I got stumped out of most of my positions that I had. One that I held on to was platinum. I talked about it last week, and I think that I wasn't so sure about my gold and silver positions, but I felt pretty confident hanging on to that platinum, and I think it's going to still turn out to be a profitable trade. The seasonals are so strong with platinum that I like holding on to that commodity in December. December's I'm trying to remember. I think it's 15 out of 15 years it rallied in December. So I still like that one.
Yeah, like we mentioned last week too, it's so low in value when you compare it to gold. It just kind of shocks me, and anything below that $1,000 mark, I'm just kind of surprised by it. So, right. I know it went to 925, 935, and even at those levels, I was like, how low can platinum actually go? So it's rallied since then, obviously, and risk management is the important part with it. But like you said, you got to kind of be willing to not be over leveraged and survive that volatility. So,
yeah, I wonder. I don't hear stackers talking about accumulating physical platinum, but for something to hold for a long term, that the ratio in price between platinum and gold right now is insanely undervalued compared to gold. And so if you're a stacker and you like accumulating precious metal, you might want to introduce some platinum into what you're buying.
Yeah, I have to agree with that. I'm kind of surprised there's no one talks about it. None of the stackers on the social media channels talk about platinum at all. So it's always, and that's the thing is usually the markets that's the quietest. It's always been kind of my motto: the quieter the market, that's the one you want to kind of sneak into. And platinum could definitely be that one to kind of sneak into. And it's similar with silver as well. I mean, I know silver's got a lot more, rhetoric behind it, but saying that,
it's sexier.
Huh?
It's sexier, I think. I don't know.
Yeah. So platinum used to be like the, you had to get the woman the platinum ring, versus a gold ring, and it's interesting now. It's more than half the price of gold, which is astonishing to me. So. All right, so let's go ahead and I'll take it from you, and I'll jump over to my side. So all right, so let's go ahead and I'll take a look at my side of the fence and what I've been looking at. Thank you, Steve, for your commentary. I went ahead and pulled something a little bit different today. We were just talking about platinum. I was looking at palladium. I don't have any trades on right now in palladium, but in saying that, might be one to consider. We've got this bottom here. We came into a bottom area right here, and like we were just talking about the ones that are the quietest are the kind of the ones you want to sneak into. And I would say palladium is presenting itself a pretty solid opportunity at this moment in time. Just based on, I'm not going to get into too much of the technicals. This is just based off of really price. Just like when silver was at 23, 24. I was really trying to get people out there involved. It was quiet. Nobody really cared. And that's kind of the same thing with this palladium down at these lower levels. You can see here back on October 29th, it was as high as 1260. So you got a couple hundred, almost $300 move to the upside. We could go possibly re-challenge, but even if you grabbed 100 out of it, it would be a decent trade. But just an interesting setup that I see right here. It is holding off of these two lows. Let's take a look at the crude oil. Go ahead.
Let me interject too. We talked about managing risk, and I don't like using stops on palladium myself because I've just seen it too often that the market makers will come in and get you. But if you're where you can watch your chart and you see a big red candle forming, if you bought it right here, then you just want to exit and get out.
Yeah.
Because I agree. It looks like to me it's a beautiful chart, and the nice thing about a beautiful chart is that you should see a clear place where there's support, and if that breaks, then you want to get out as quickly as you can.
Yep, understood. So basically putting these stops below these where if you were to get in, let's say you worked a limit here at 910. This is hypothetical. We're not saying to do this, but if you got in at 910, where would you put your stop if it were you, Steve?
Yeah, I'd probably say 895.
Okay.
Something like that.
Okay, so just right below it.
So you're not thinking a whole lot about taking a long position. That's why I think it's a beautiful.
Yeah.
Chart.
No, it's I used to have a colleague in my early days, in my spot trading days. The only thing he would sell his clients was palladium. That's it. He had a whole book of palladium back in the day, and that's all he focused on. It was interesting character. But let me go and take a look. Crude oil was an interesting setup. I think it's quite a bullish setup here. You can see right here, we're trending. These lows are going higher and higher. I mentioned it last week. This one, I think, is really could be possibly setting up for another really decent run right here. Just the way it's the wedge formation, you can see right here. And then you see the previous 75.41. I think that could possibly be in the cards, unless the stock market were to really tank. Then you would see this come down. But if we get that Santa Claus rally that Steve was talking about, you could easily see a crude pick up and go from there. Another one, natural gas. I had some client that was long, got out before we had this pop. But saying that, we were doing some option plays in this, but going into the season, I know the forecasters were saying it was going to be a mild winter. I tend to do the opposite of whatever mainstream media says. And here we go. We're off and running. I'm not saying take a trade now, but if you see this thing pull back, there could be another possible opportunity. I think, natural gas has a lot of possible upside potential right now, as long as the weather stays favorable for it as well. And then one more. Did you talk about the Dow Jones, Steve?
No, but you showed that chart last week, and that was kind of an equivalent to palladium. I really liked it because you can manage the risk to that one easily as well. I think it'd come right to the 200-day moving average.
Yeah,
wasn't it? And so yeah, the Dow would be another strong stock. I bought the Dow today, and I always try to, when I'm convinced that we've got a bottom in place, I'll buy a little bit of most of the other indexes.
Yeah,
I'll get a pack of them because I never know for certain which one's going to do the best. Usually it's the NASDAQ, but I don't know. We're getting starting to get late in this intermediate cycle, like I mentioned earlier, and I don't know for sure which one's going to do the best. So,
yeah, it'd be interesting. I usually like to play a counter trend, where we kind of bounce back to my little moving 15 and 40. And since it's pulled so far away, like you said, it should have a small bounce here on the YM is what I'm looking at right now. And just let you know, this is YMZ. We did roll over to YMH 24 today. So go ahead and just make note of that for all you traders out there that we're now trading off of YMH 24. But do you have any other comments this week? Anything interesting outside of everything that you've talked about so far, Steve?
No, we're next week we'll be going into Christmas, and so there'll be some days there where even the traders will like to take off and do things with their family on Christmas. So usually the volume lightens up quite a bit.
Yeah, yeah.
Christmas week.
And also what's interesting is we're going into a holiday schedule, and we're Christmas and New Year's are both falling on Wednesday, which is kind of an odd year, I will say, even for my kids. I don't feel like, I mean, people are in the Christmas spirit, but not as much so as normal if it were, say, Christmas was falling on Thursday, Friday, Saturday, or Sunday. I just feel like kind of people want to get through this year. So I think we're still going to be pretty active. I mean, from a trading perspective, I think it'll be thin, but I think there's going to be some activity where, we just kind of get through that Wednesday. So that's just kind of my thoughts right now. So, all right, well, let's go and wrap this up. I appreciate everybody coming out to our little commentary. And now, again, this isn't specific recommendations. If you want specific or talk about risk or anything that you're doing, call Steve or I. He runs his Wade's Trades, which is an advisory service. I also run ProGoldTrader.com, which is a kind of an educational portal for precious metal, or I should say gold bugs. But if you do have any questions, specific trades or option plays, definitely reach out to Steve or I, and we'll take care of you. On that, hope you guys all have a great day.